Tesla has been facing strong headwinds in recent months, particularly due to new tariffs imposed by the Trump administration, political controversies involving Elon Musk in Europe, and a sharp decline in the company's stock. These factors are significantly shaking Tesla's once unshakable image. The company, which once dominated the electric vehicle market and was seen as an unrivaled leader, is now encountering serious setbacks both in financial markets and sales performance. Tesla shares have recently suffered a near-historic decline, largely triggered by global instability stemming from Trump's trade tariffs and Musk's political moves in Europe. At the same time, Wall Street has seen a fresh wave of sell-offs following warnings from the U.S. Secretary of Commerce about Tesla's stock being risky. Additionally, the company has been hit hard by what is being referred to as the Musk effect, alongside intensifying competition in the European market. The impact is particularly severe in Germany, where Tesla's sales dropped by nearly 70% in January and February. The rapid loss of market share in France and other European Union nations has further deepened the company's struggles in the stock market. Several factors contribute to this downturn: U.S. trade policies, Musk's controversial political statements, aggressive price competition, and European consumers distancing themselves from Tesla. Since the beginning of the year, Tesla shares have been on a steep downward trajectory. Some see this as a temporary panic, while others believe it signals deeper structural issues. A combination of factors, including increased competition from Chinese and European automakers, rising raw material costs, and Musk's political controversies, has eroded Tesla's reputation and financial strength. Even comments from the U.S. Secretary of Commerce regarding Tesla shares had the unintended effect of further driving down stock prices, as investors questioned the unusual intervention from government officials. The numbers paint a concerning picture. Tesla shares have plummeted by nearly 53% since the start of the year, shocking investors. According to Bloomberg data, the stock suffered up to a 7% decline in a single day in mid-March. By the close of March 14th, Tesla's market value had fallen from $770 billion to $635 billion, marking a nearly 20% drop in just 1 month. In response, the Royal Bank of Canada lowered Tesla's price target from $220 to $175, citing concerns over competition in China and Europe, as well as Musk's preoccupation with Twitter, which has unsettled investors. Musk has long been at the center of political debates, and a remark from a trade minister suggesting that Tesla and Musk pose a risk only added fuel to investors' concerns, triggering a 6% drop in Tesla's stock. The company has also been hit by retaliatory tariffs resulting from the ongoing trade conflict between the U.S. and China, which have increased Tesla's supply chain costs and further strained its non-U.S. sales. One of the most alarming trends for Tesla is the sharp decline in sales across Europe. Electrek reported that Tesla's EV sales in Germany fell by 70% in January compared to the previous year. Given Germany's status as Europe's largest automotive market, this represents a major loss in market share. Additionally, deliveries of Tesla's Model 3 and Model Y have fallen below expectations. French and Italian media have also noted this trend, with Euronews linking Musk's political stance and social media controversies to a deteriorating perception of Tesla among European consumers, who place a high value on environmental and social responsibility. CBS News has pointed out that Tesla's decline in Europe is happening despite the overall growth of the EV market. While other electric vehicle brands continue to expand, Tesla is losing ground. Investors are growing increasingly concerned, not just over Musk's political controversies, but also about the company's lack of a clear long-term strategy. The U.S. Secretary of Commerce's statement that Musk's political actions pose a risk to Tesla's stock was seen as an official warning, further accelerating the sell-off on Wall Street. Between March 14th and 16th, Tesla lost $70 billion in market capitalization. Tesla's struggles in Europe are further compounded by rising competition from established European automakers like Volkswagen, Renault, Stellantis, and Kia, as well as aggressive expansion efforts from Chinese brands like BYD and NIO. BYD, in particular, has been making a strong push into key European markets such as Germany and Norway. Meanwhile, Despite the launch of its Berlin Gigafactory, Tesla's production expansion has slowed, allowing competitors with local manufacturing advantages to gain ground. Market analysts have also questioned Tesla's stock valuation, suggesting that it was inflated based on future growth potential rather than actual earnings. With rival automakers ramping up EV production and capturing more market share, Tesla's position as the sole dominant force in the industry is being challenged. Economic pressures, supply chain disruptions, and rising material costs further threaten Tesla's ability to compete effectively at the same time. Internal reports suggest growing concerns about Tesla's corporate governance. Many senior executives have left the company, and Musk's intense focus on Twitter has fueled speculation that he is neglecting Tesla's core business. Labor issues and regulatory hurdles at the Berlin Gigafactory have also raised concerns about Tesla's ability to meet its production targets in Europe. Musk's clashes with European regulators and politicians have further alienated the company from key decision-makers. As a result, Tesla's struggles extend beyond just declining sales. Political tensions, regulatory challenges, and Musk's personal controversies are all weighing heavily on the company. Investors are now closely watching Tesla's next earnings report to see if the company can stabilize its financial performance. If European sales continue to fall short of expectations, analysts warn that the stock could face even further declines. The situation is particularly precarious given that China, another crucial market for Tesla, is also becoming increasingly competitive with the rise of domestic EV brands. Some analysts have even begun questioning whether Tesla's golden age is coming to an end. While Musk has successfully navigated challenges in the past, the current combination of trade wars, intensifying competition, political controversies, and economic uncertainty presents a uniquely difficult set of obstacles. If Tesla hopes to reverse its fortunes, it may need to take decisive action, whether by accelerating new battery technology, ramping up Cybertruck production, or managing Musk's social media presence more strategically. For now, however, the company is facing one of the most challenging periods in its history. Tesla's decline in Europe is particularly striking because it comes at a time when the overall EV market is still expanding. This suggests that many consumers are actively choosing other brands over Tesla. While some attribute this to Musk's political controversies, others point to practical factors such as pricing and service networks. In Germany, for instance, Tesla may now be perceived as both expensive and lacking sufficient service infrastructure. Meanwhile, emerging European EV brands are gaining traction, further squeezing Tesla's market position. The company has attempted to counteract these challenges by cutting prices in Europe, but this strategy has not been well received by investors, as it directly impacts profitability. For years, Tesla was able to thrive thanks to Musk's visionary leadership and ability to generate excitement around the brand. However, mounting challenges, including tariffs, political disputes, and intensifying competition, are creating significant turbulence. With Trump's trade policies adding further uncertainty, Tesla's global operations face mounting logistical and financial pressures. Some analysts believe the stock's 53% drop could continue, while others see a temporary panic that may subside if Tesla can deliver strong earnings. Ultimately, Tesla's fate will depend on how well it adapts to these shifting dynamics. Can the company recover from these setbacks and emerge stronger? Or is this the beginning of a long-term decline? Share your thoughts in the comments and don't forget to like and subscribe.